Market outlook. Calendar week 08. Calendar week 07 was characterized by a persistently restrictive interest rate environment and defensive positioning across multiple risk asset classes. Short-term US funding costs remained close to the upper bound of monetary policy, while yields at both the short and long ends of the curve stayed elevated. Real yields continued to operate in a range that acts as a structural headwind for non-yielding assets. This configuration also affected the digital asset market through the transmission mechanism of rates, US dollar, global liquidity, risk allocation. Within the crypto market, market breadth declined. Capital became increasingly concentrated in highly liquid segments. Bitcoin dominance rose week over week to 54.85%, underscoring the relative weighting in favor of BTC compared to the altcoin complex. At the same time, aggregated open interest in BTC and ETH declined over the course of the week, indicating a reduction in leveraged positions. 8-hour funding rates hovered near the neutral line, showing no pronounced one-sided positioning. The Crypto Fear and Greed Index remained in the defensive zone, reflecting restrained risk appetite. Combined with rising Bitcoin dominance, this suggests selective capital allocation alongside reduced alt-beta exposure. Against this backdrop, Quantum Data Analytics did not release any new research signals in CW07. The models are based on statistically validated configurations derived from liquidity impulses, momentum confirmations, volatility regimes, and positioning data. During the past week, there were neither robust trend continuations nor clearly defined mean reversion setups with sufficient signal quality. Declining open interest, neutral funding structures, and macroeconomic uncertainty resulted in a data environment below internal threshold levels. The decision not to publish was rule-based. In addition, geopolitical tensions acted as an exogenous uncertainty factor. Developments across several regions influenced energy prices, trade flows, and risk premia. Through exchange rate and interest rate channels, these effects indirectly transmitted into digital assets. With the transition into calendar week 08, attention shifts to several macroeconomic releases in the United States. On Monday, February 16th, the Empire State Manufacturing Index and the NAHB Housing Market Index will be published. On Tuesday, February 17th, US, retail sales ex-auto, industrial production, and capacity utilization will follow. These data points are relevant for assessing economic momentum and influence nominal and real yields through expectations regarding the monetary policy path. Corresponding release windows represent potential volatility catalysts for BTC and ETH perpetual contracts. On the crypto side, a token unlock for Arbitrum is scheduled for February 16th. Supply expansions of this nature temporarily increase circulating volume and may lead to localized price movements in conditions of limited order book depth. Market reaction depends on liquidity conditions, hedging activity in derivatives markets, and the allocation structure of larger participants. Global M2 money supply most recently recorded a moderate 3-month expansion, primarily driven by Europe and China. At the same time, US real yields remain a dominant valuation factor. The interaction between global liquidity and a restrictive US rate environment continues to form the structural framework for digital assets. Currently, the combination of elevated Bitcoin dominance, defensive sentiment, and declining open interest points to an environment of limited market breadth and selective risk appetite. Quantum Data Analytics remains cautious regarding new research signals as long as no consistent, statistically robust patterns emerge across liquidity, positioning, and momentum. This report is provided for information and research purposes only. It does not constitute investment advice or a recommendation to buy or sell any asset. Quantum Data Analytics. Analytical. Strategic. Innovative.